In this video, we will understand very important concept of the options, that is called as the intrinsic value and the time value. Option contains two types of value. One is the intrinsic value, another is the time value. To understand this, we will take a real-time example. For example, that potato chips packet is there, right? For example, Lay's. What does it contains? It contains some amount of the chips and the remaining is air. Likewise, in the money options contains two types of values. One is called as the intrinsic value, that is the chips, and the remaining is called as the time value, that is air. Okay, before you understand the concept of the intrinsic value and the time value, you should know the difference between the in the money strikes, at the money strikes, and out of the money strikes. I have done the exclusive video on the same so that you can check it out. Let me give the brief introduction about the in the money, at the money, and out of the money. On the call side, all the strikes which are below the current market price. For example, in this case, Nifty is currently trading around 23,550. Okay, all the strikes on the call side below this particular strike. For example, 23,450, 23,400, 23,350. All are called as a in the money strikes. And the strike which is above 23,550 are called as a OTM strikes. The strike price 23,550, which is called as a ATM, at the money strikes. The concept of intrinsic value and the time value comes only in case of in the money options. For out of the money options and at the money options, they don't have any intrinsic value. They only contain time value. That means they only contain the air. No chips are left in the at the money and the out of the money strikes. What it means, that I will explain later. The bottom line is that the intrinsic value and the time value comes into the picture only in case of in the money options. On the put side, the strikes above 23,550, which is current market price. For example, 23,650, 700, 750, 23,600, all are called as a in the money strikes. On the put side, okay, current spot price which is 23,550, right? That is called as a ATM. ATM for the put and call is the same. So any strikes below 23,550, all are called as a OTM puts. Okay, now we understand what is in the money, at the money, and out of the money. Now let's understand what is meant by intrinsic value and the time value with example. Now let's understand what it means by intrinsic value and the time value and how to calculate it. In this example, we bought a strike of 23,400 call. So 23,400 call, but Nifty is currently trading around 23,550. That means this is the in the money call. In the money call we bought of strike 23,400. How to calculate the intrinsic value? To calculate the intrinsic value, take the spot price of the stock or index. In this case, Nifty is 23,550 minus with the strike price. Strike price is 23,400. So 23,400. So what is the value we will get? It's 150. This 150 is there, right? This is the intrinsic value for this particular options. In our real-time example, chips example, right? It contains the chips as well as the air. That chips is called as the intrinsic value. The chips value is 150. So what is the air value or time value? To buy this particular options, we paid 254 rupees. Okay, 254 rupees, out of which 150 we just calculated is the intrinsic value. So if you minus this intrinsic value from the exact premium we paid, the exact premium we paid is 254 rupees. 254 minus 150, that is 104 rupees. This 104 rupees is there, right? This is called as a time value. In our real-time example, the chips example we take, right? This is called as a air. Okay, what does that means? The in the money options contains a two value. One is the time value, another is the intrinsic value. So we can relate that to the chips and the air in our real-time example. Now let's understand how to calculate the intrinsic value and the time value for the put options. Intrinsic value and the time value comes into the picture only in case of in the money options. Nifty is currently trading around 23,550. All the strikes above 23,550 on the put side is called as the in the money strikes. In this example, I have taken 23,700 put. To calculate the intrinsic value of the put option, take strike price. Strike price in this case is 23,700 minus with the spot price of particular stock or index. Nifty is currently trading around 23,550. This is the spot price. So the difference is 150. This 150 is there, right? This is called as a intrinsic value. In our real-time example, this 150 is there, right? This is called as a chips. Now we found the intrinsic value of this particular put option. Let's see how to calculate the time value for this particular put option. So to calculate the time value, what you have to do is that you have to take the premium which we paid. The premium which we paid, you can see over here, is 234 rupees. Okay, that intrinsic value is 150. That means if you minus these two things, what you will get is the time value, that is 84 points is there, right? This is the time value. The 150 is there, right? This is the intrinsic value. Let us summarize the things what we learned so far. We learned what is meant by in the money, at the money and out of the money options. In the money options contains intrinsic value and the time value. ATM, at the money, and OTM, out of the money options, doesn't have a intrinsic value. It only contains the time value. To calculate the intrinsic value of the call option, what you have to do is that you have to take the current stock price or the spot price minus strike price. Then you will get the intrinsic value of the call option. To calculate the time value, you have to take the call premium, so which we paid, minus intrinsic value. If you do, then you will get the time value. To calculate the intrinsic value on the put option, you have to take strike price minus current stock price or the spot price. Then you will get the intrinsic value of the put option. To calculate the time value of the put option, what you have to do is that you have to take the put premium, whatever we paid, minus intrinsic value. If you do, then you will get the time value for the put option. I will share this formula in the description. You can have a look. I hope you enjoyed watching this video. Thanks for watching.